What's up, everyone? It's Caddy with BuddyVest. So what a day it has been in the markets with NASDAQ, S&P, and the Dow Jones literally selling off towards the last 2 hours into the close. And in this video, I'm going to break down what happened. In my opinion, I suspect there was a lot of profit taking that took place. There wasn't any specific catalyst. Of course, the media is going to try to attach a catalyst over to the sell-off. But the bottom line is we were extremely overbought. We've been talking about this for quite some time on the channel. The markets have been on a very strong rally. There's been 6-7 consecutive weeks of green. All sectors are green in the last 1 month, in the last 1 week. And of course, yesterday, all 11 sectors were also positive. So this is a very, very, very normal thing. And that's exactly why we were talking about selling calls and hedging for a potential pullback and some downside. Volatility spiked over 9 to 10%. We had the markets rolling over, and of course, a lot of individual stocks were down 2 to 3 to as much as 4 or 5% on the day. So we're going to cover all of that. As always, if you enjoy this video, find it helpful, make sure that you drop a like. I would really, really appreciate that. And subscribe to the channel if you haven't already. There is a 16% annual discount that's available until the end of December. So you get access to all the members only videos, full access to all the spreadsheets, including my fair values on individual stocks. And most importantly, the Discord channels, including trade alerts and ideas. I've been selling some calls that are up now over 30 to 37% in just 1 day. I sold them yesterday on both Enphase and Tesla in anticipation of these pullbacks and these sell-offs, considering how much the markets have been rallying. And also, folks, I had my shortest trade of my trading career in over 9 years of doing this. I had my shortest trade ever, and it only lasted for 26 seconds. By the time I was able to alert everybody on Discord, the stock had already moved so much, so I had to get out. But this was on Mara, 1,500 shares at 23.37. That's where I bought, sold at 23.87, just a little bit over $700 or 2.5%. Could not be more, excited about the shortest trade, less than 30 seconds. And definitely do check out my Instagram if you want to connect with me there. I do post a lot of interesting stories just like these, portfolio updates, and a lot of other polls and strategies and tips. And of course, definitely do check out the Discord if you want to get access to a lot of alerts related to long-term investing, swing trading, and options trading as well. All that's going to be included with a link down below. So this is what the markets look like. Pretty significant sell-off. The Dow here down 1.27%. The S&P back under 4,700. The NASDAQ back under 15,000, down about 1.5%. A lot of folks have been talking about how the futures are green. They're not all that green. They're green by just a little bit. I mean, we do have the NASDAQ futures up 34 basis points. The S&P is up 24, and the Dow is up a little bit over 16. So, the sell-off that we've seen versus the futures that are pushing higher, it's just not equivalent, right? We've gone up down 1.5% with futures up only about 30-40 basis points. So it doesn't even cover half of what we lost in the markets in the last couple hours. And I think the markets the S&P erased close to $600 billion of market value towards the last couple hours, considering just a violent sell-off. And of course, the volatility here spiking a little bit over 9%, back over 13.66. Now, the moves follow a losing day on Wall Street, during which investors took profits after recent gains. The S&P dropped almost 1.5% in its worst day since September, and the Dow and the NASDAQ slipped 1.3 and 1.5% respectively to notch their worst sessions since October. And Wednesday's sessions also snapped a 9-day winning streak for both of these indexes as well. And the drops mark a breather from the recent market rally from their late October closing lows. Through Tuesday, the Dow and S&P both jumped more than 15%, and the NASDAQ is up a little bit over 19%, with the Dow and the NASDAQ 100 hitting a new all-time high. The S&P less than 1% away from its all-time highs. Of course, after today, we're now over 2% away from our all-time highs. So this was Rob Howarth, Senior Investment Strategist at US Bank Asset Management. The markets have been running so strongly for so long. There's maybe just some exhaustion in terms of buyers, and we're starting a bit of a short-term consolidation phase. So, we've been talking about this for quite some time. I've mentioned this in my other videos. We've talked about how we are incredibly overbought. This is something that I specifically pointed out to in one of my previous videos, and this is why it's so important to look at this data-driven analysis, because when you look at the RSI reading of over 80 on the RSI on the S&P 500, and you immediately understand that we're in the 99th percentile, 99.3 percentile, which is extremely rare. And in the last 90 years, this has only happened less than 1% of the times. That should immediately just kind of, there should be like a bulb sort of lighting moment, and where you should understand, okay, well, this is an extremely overbought, overextended market. This is a very, very rare occurrence. It is any day now, any day we could see a pretty significant sell-off, meaning that we could see a pullback and a correction. It's a very normal thing. It's nothing to be afraid of. It is nothing that could surprise you, right? As long as you are prepared and understand these sort of analysis that, okay, market's extremely overbought. We haven't been here for a very long time. Only less than 1% of the times we're actually trading in this environment. So this is definitely a rare occurrence. This is the volatility. And before today, we were even lower at 15, 16 percentiles, and we were in a rare sort of condition because we were trading at around 12s, mid 12s. And of course, after the 9 to 10% rally, we're back over 13. And you'll notice days under 20 is 61% of the time. So majority of the times, the volatility is really low. However, days under 10, you can see the immediate drop between those two numbers. So what I mean when I'm doing these volatility analysis is to really help you understand these two numbers right here on the way down, right? So days below 20 and days below 10, okay? Those are really two important numbers to understand. So days below 20 is 61%, right? So that is a pretty majority number. So majority of the times, volatility is under 20, but take a look at days under 10, less than 1%, right? So what does that tell us? That simply tells us that majority of the times, over 60% of the times, volatility spends its time between 10 and 20, right? So the moment it drops below 10 and the moment it gets closer to 10, we're getting to very, very rare sort of events. In other words, volatility is extremely low, something that we haven't seen in, majority of the time, something we have only seen less than 1% of the times. So it's very possible the VIX will spike, the markets will pull back. It is just data. It is just historical analysis based on statistics. This right here is another indicator that we looked at, right? So S&P 500 stocks trading above their 20-day moving average. And it was also at a rare level at over 84, meaning majority of stocks, 84, 85% of companies trading above their 20-day moving average in the 91st percentile, which again was a rare occurrence. And if you can see, the days above 80 is 15%. So not less than 1, but just a little bit over 15%, but still a minority. Majority of the times markets do trade below. In other words, majority of stocks do trade below their 20-day moving average. So very, very normal things, nothing to be afraid of. We're just under 4,700 now. Valuation has come down slightly, back under 21 based on 2023 expectations of $225 EPS and an earnings yield of just under 4.8% as well. I do also want to mention, everyone, that we've got our Christmas sale going on right now. The coupon code is going to be Santa Rally. Definitely do check that out. You get lifetime access to all the courses, 50% off on all individual courses. So all of them are going to be 50% off with these bundles that you can access up to 50, 60, as much as 70% off. And of course, again, lifetime access for 130 plus lectures, over 35 plus hours of content, including my cheat sheets and all my spreadsheets, including coupon code is going to be Santa Rally. And this does expire on December 28th. So after Christmas, it does expire. So this right here, state of the market, very, very good. Nvidia down 3%, Tesla down almost 4%, Microsoft, Apple, AMD, of course, Broadcom, Oracle, a lot of them selling off here. In fact, believe it or not, I actually had a video idea on my notepad for the VIX analysis. I was going to be doing a VIX analysis because of the fact that how low it really was, and we could be expecting a spike any day now. That's exactly why I actually shared 5 short trade ideas in our Discord earlier in the day. I specifically pointed out to 5 stocks that are now trading at extremely overbought levels that the risk reward is very, very good on the short side. So I shared those 5 stocks in our Discord. Definitely do check that out. It's going to be under the trade ideas section where you can access those 5 stocks and what the risk reward looks like for them on a short perspective. But overall, markets here obviously selling off. Google surprisingly held up really well, but everything else down, all 11 sectors, except for communication services on the back of Google that somewhat stayed flat. Everything else was down by at least 1%. In the last 1 week, of course, we've got a bit of a split market now, and in the last 1 month, energy is the only sector that has underperformed. Everything else is pushing higher. In the last 1 day, we've got lumber, we got feeder cattle, we got live cattle, Russell 2000, cocoa, cotton, everything pushing higher, with natural gas, sugar prices, orange juice, and coffee selling off. And then of course we've got Bitcoin here a little bit over 43,000 and Ether just under 2,200 as well. So coming up to crude oil prices, kind of hanging up there at that support now. So this oil resistance now starting to turn into a new support, I would say, at around $72, $73 a barrel. So this right here is going to be that new support level, consistently making this lower high and lower low. And of course, if you do break out above this level, the next target is going to be $81 a barrel, and support level is going to stay put down to as low as 66 to as much as $73, $74 per barrel. Volatility here on the move. So again, it's going to be a real question of whether the VIX spikes even further to as much as 19 to 20 levels, or if we are going to see volatility kind of die down once again and for this market rally to continue. As I've mentioned before, I think the December seasonality is still going to continue strong going into next week. But January of 2024 is when I could expect the markets to see a little bit of a bigger pullback or some type of a correction or some profit taking, considering that we'd be done with the tax year, we'd be done with the December seasonality, we'd be looking at some very overbought, overextended markets, and volatility could also be on the verge of maybe spiking a little bit further, considering going into 2024, those fears of a recession and somewhat higher interest rates for longer is going to resurface once again. So that's something to keep in mind. But going into next year, I am kind of betting on smaller caps and biotech. I do believe that's where the opportunity might be, along with, of course, technology and Magnificent 7. Again, I will be doing a more separate video going over my 2024 picks for all the members. That's going to be a private members only video posted for everyone in the Patreon as well. So keep a close eye on volatility, up a little bit over 9%, 13.66 is where we are. Bitcoin here pushing higher very nicely up to over 43,600. Next target and resistance at 48 to as much as 51,000. And Ether also just a little bit under 2,200 here, just kind of inside this red rectangle, trading in that resistance as well. Now going over to the yields, the 6-month here starting to roll over a little bit, but the 10-year has dropped under 3.9%. So this continues to drop, which is a good thing. And this is exactly what we talked about. And despite the yields falling, the markets did not find a reason to rally higher. That tells you something, right? That definitely tells you something, because despite the yields coming down, the markets did not see any type of momentum. And there's a couple reasons for that. Number one could be profit taking. As I've already mentioned, the markets have been rallying so hard, so much. Investors want to take some profits off the table. And number two, if there is continued panic buying in the bond market, right? So investors want to take some liquidity out of equities over to fixed income. They want to move that liquidity out of stocks over to bonds, because the yields coming down is going to create this panic buying environment, which we have talked about, that investors and capital allocators worldwide are going to look at these yields and be like, okay, if this yield is not going to be there 1 year from now, I better lock this rate in when I have the chance today. And that's exactly why there's going to be a lot of demand for the bond market for yields to continue to drop further. Now going over to the markets, so S&P 500 here, pulling back pretty aggressively. So, pretty big red candle. RSI immediately dropping back down to under 70. MACD also coming down. So again, this is not a surprise. This should not be a surprise for anyone. And on a weekly basis, this candle does not look good, to be honest. Like, this has been 6 or 7 consistent weeks of green, and this right here is a inverted hammer candle, which definitely does suggest a little bit of a reversal in the overall trend. So we'll continue to monitor what tomorrow and the day after looks like for the market, but definitely be on the lookout. And selling calls is the way to go for me and my personal portfolio. I'm selling calls to kind of hedge that potential downside, and we'll be looking at selling more calls for a lot of these individual stocks so I can hedge with that potential downside moving forward. Talking about the NASDAQ, same exact thing, inverted hammer candle. And definitely doesn't look good on the daily as well. Pretty significant sell-off here. RSI, MACD once again dipping back under 70. Next support really is going to be 14,400 to 14,600 for the NASDAQ as well. Talking about Apple here, Apple rolling over a little bit over 1%, so getting rejected at 198, 199. So this right here is the resistance that we talked about for Apple, and of course next support is going to be down to 189, close to $190 per share for Apple moving forward. Talking about Amazon, and Amazon here also pulling back. It did have a pretty significant breakout. I was planning on selling some calls. I really should have. I was definitely planning on selling calls here for Amazon, but didn't really get enough premiums. But I always forget, it's literally free money if you sell it farther out of the money. So we'll be looking at potentially selling some calls tomorrow on Amazon. Support level is going to stay put down to 148, all the way down to 134, 135 for Amazon. Talking about NVIDIA here dropping pretty aggressively, down a little bit over 3%. No surprises. It was already at a resistance at $500. So starting to come right back down. The next support really is going to be all the way down to as low as $395, close to $400 per share. And AMD here also in a very similar environment. I literally mentioned this as one of the short trade ideas in our Discord. You know what? Let me see if I can bring that up. I'm just only for this one. I'm going to, you know what? No, that's going to be private to members only. I'm not going to share that. But this right here is the significant sell-off here. Of course, RSI MACD was incredibly overbought. We're starting to see that sell-off. MACD, if it crosses below that signal line, it is possible that we continue to see more potential downside here for advanced micro devices, and that next support, of course, is going to stay put down to $131 per share, all the way down to as low as $112 for AMD. That's going to be next. Talking about PayPal, and PayPal here also pulling back a little bit over 2%. So next support really is going to be down to $56, $57. RSI, of course, slowly and steadily has been drifting higher. So resistance is going to stay put at $65 per share. And we are seeing that next support and that next target at $56 per share for PayPal. Talking about Visa, and Visa here also starting to pull back a little bit. It has been obviously pushing higher quite considerably. Next support is going to be inside this green rectangle, and that support sitting roughly at around $245 to $250 per share. And of course, if we do see a breakdown below this, the next target and support is going to be $228 for Visa moving forward. Talking about Meta platforms, and Meta here on the day, surprisingly holding up pretty well. So it's at a resistance at 352. So this right here is going to be that level to watch as a resistance for Meta. And support level is going to stay put inside this green rectangle, sitting roughly at 330 to as much as $315 per share. So inside this green rectangle is going to be a very, very important support. And of course, a resistance stays put at 352 for Meta as well. And a very nice, consistent higher highs and higher lows for the company. Talking about Netflix, and Netflix here also starting to push down a little bit. 45 is going to be that next support. Very, very nice, consistent rally for Netflix. It got very, very overbought. We did see a bit of a pullback. So this right here was a reasonable pullback here for Netflix. And then, of course, rallied back higher. And again, support level is going to stay put down to 450 now for Netflix moving forward. Talking about Google. And Google here up to its resistance, and now pretty much inside this red rectangle in this area of resistance at the moment, pushing up over 1%. It was probably the only stock that actually did manage to rally higher on the day. But of course, getting up to that resistance now, wouldn't be surprised if there is some profit taking or some pullback here, correction for Google. Support level is going to stay put down to 126 for this company as well. Talking about Microsoft, and Microsoft here also starting to roll over a little bit, down about 71 basis points, still within the context of what I would call a very decent uptrend, higher highs and higher lows. So we do see a breakdown below 366. The next target and support level is going to be staying down as much as $340 for Microsoft. And then, of course, finally, we got Costco and Enphase, and Costco here pulling back a little bit over 2%, I think. 2.47%, so starting to come down. RSI at MACD here also rolling over. The next support is going to be down to $603 per share for Costco. And then, of course, finally, we've got Enphase Energy, which was down a little bit over 5%. That's exactly one of the reasons why the calls are currently printing. And the next support is going to be down to as low as $109 per share. So inside this green rectangle is going to be the one to watch for Enphase. So hope you all enjoyed this video and found it helpful. As always, make sure that you drop a like. Quite an interesting day in the markets, with the majority of stocks here obviously selling off on the back of the entire market here pulling back, and of course a lot of course inverse ETFs like UVXY. We did have the volatility, of course, pushing higher on the day. Definitely do check out the links down below. The Christmas sale is now live until December 28th. Coupon code Santa Rally, 50 to 60% off on individual courses and bundles. And definitely do check out the links down below for our Discord, for our Patreon, and my Instagram if you want to connect with me there also. As always, happy investing, and I'll see you all in the next video.